Welcome back. We are discussing the slide in the Indian rupee and its impact with Dr. Subir Gokarn, the former Reserve Bank of India Deputy Governor. What instruments are available actually with the RBI to arrest the slide of the rupee?
I think we have to be very realistic about the situation as it stands. There are some instruments available to deal with short-term temporary movements. But here we're talking about a much more persistent and much stronger kind of trend in the currency, and these are not going to be. This is not going to be addressed by these short-term tactical kind of measures. They will help. They can be a part of a response, but ultimately the response has to be in terms of addressing the structural problems that are driving this current account deficit, and that means basically we are importing a lot of things that we perhaps shouldn't be importing so much of, and our exports are not growing. Now, of course, the global environment is such that export growth cannot be expected to be very fast. So the question is then, are we taking advantage of all the opportunities we have, and on the other side, should we not be producing domestically some of the things that we're currently importing? And that there's a whole range of things there, but I can give you the specific example of coal, for example, where we're importing a lot of coal now, much of which perhaps could be produced domestically if we had the right infrastructure in place. But as you know, we've had some issues with expanding our domestic coal production. So there are these structural problems which need to be addressed, and the solutions will not come overnight. So that pressure is going to remain. But I think we need to have some credible action going on them, because without that, there is no solution in sight.
Reports suggest that RBI had stopped intervening when the rupee was about 55, saying that the rupee would find its own level. What do you think is a fair level for the rupee?
I really don't have a view on what the fair level is. It's a question that's difficult to answer at the best of times, and we're in a rather volatile situation. It's really a daily demand and supply scenario. On days in which the demand for dollars to finance exports, to finance imports are there. There are days on which capital inflows are very sparse. On those days, the rupee moves down. There are days on which the capital inflows are quite strong. Those days, the rupee moves up. But to pin down a specific value at which it will settle, I think, is a rather hazardous exercise at this point.
Some forex dealers suggest that the rupee will be in the range of about 58 to 61 to the US dollar. What range will it be this fiscal, in your opinion?
I cannot make these predictions. I don't make.
You've suggested that FDI inflows are the solution to fund the current account deficit. Now, how can this be done?
I think FDI basically comes in when you have a healthy, hospitable investment climate in the country. The factors that induce domestic producers to invest in capacity are the same factors that will induce foreign investors to invest. So, in improving the investment climate is the critical issue. So how do we do that? There are lots of concerns about weak infrastructure. So maybe there has to be a push towards stronger public commitment, public resources going into certain kinds of infrastructure, not everything, but certain kinds. There are issues about clearances, environmental clearances, land acquisition, all of these. So, there's a lot of movement on these fronts. Cabinet Committee on Investment, special cell that's been set up to support that, land acquisition bill. All of these are adding up to improving the overall investment climate, but there are also lots of debates and concerns about how effective they will be, whether they're actually solving the problem or not. So I think we need some clarity and some conviction on this basic goal, which is that unless we get the investment climate back to some degree of conduciveness to investment, no investment is going to come, whether it is domestic or foreign. And I think that's really what has to be the primary focus of government policy.
How vulnerable is the rupee in the current global market?
It is vulnerable to the extent that because we have such a large exposure on the current account, anytime there is a global upheaval and money stops flowing to emerging economies, those emerging economies with large current account deficits see the maximum depreciation in the currency. So that is an indication of the degree of vulnerability that the country has.
Does a depreciated rupee actually have any advantages, Dr. Gokarn?
In some situations, yes, because it makes exports more competitive. It makes the prices of Indian goods in foreign currency terms lower, so that Indian exports are more attractive. But currency or exchange rates are not the only determinant of competitiveness. There are other factors going into it as well. And let's not forget that a lot of other emerging economies in this situation have also seen their currencies depreciate. So in that sense, the rupee is not behaving in isolation. It is moving along with other currencies as well, perhaps a little more than others, but it is moving along with others. So there is no great competitive advantage coming from rupee depreciation at this point, because other currencies are also experiencing the same benefits.
How would you assess the rupee in terms of other currencies? Would it be better for us to trade in a different pool of currencies? For instance, the BRICS countries were talking about a currency pool of their own.
Well, it's always good to think in terms of collective solutions, and if there is a group of countries that can trade effectively within themselves, insulate themselves to some extent from the volatility or the turbulence in the global market. But I think from a practical perspective, the kinds of things that the BRICS countries trade with each other not necessarily very conducive to this kind of arrangement. Look at geographic distances. Look at the fact, there is some natural affinity in the sense that two of the BRICS countries, India and China, are commodity importers. Two of them, Brazil and Russia, three of them rather, Brazil, Russia and South Africa, are commodity exporters. So there is a natural affinity there. There are some opportunities there which need to be exploited. But all of these countries export and import from a lot of other countries as well. China's biggest export market is the US and Europe. India's biggest export market is US and Europe. These are not going to fit into that kind of framework. So maybe there are limited opportunities to exploit, but I think we can't be looking at this as some sort of substitute for the transactions in hard currencies and in advanced economic currencies that we are dealing with, which is now the sort of basis of our international trade.
Will the rupee breaching the 60 mark have a long-term impact on India's credit ratings, Dr. Gokarn?
The basis of the credit rating is the fiscal situation. That is the core parameter which goes into credit rating. Other factors certainly also are taken into consideration. One way in which it can have an impact is if the rupee price of oil goes up, and it will obviously, the rupee continues to depreciate, but this is not translated into an adjustment in domestic prices. The subsidy element goes up, and therefore the fiscal problem accentuates. The fiscal problem becomes larger. So that would translate then into a scenario where the fiscal deficit is becoming bigger, and that may then spill over into a higher credit risk. So that's one channel through which it can operate. A big current account deficit also, in a sense, gives some indication of vulnerability. So clearly there are risks associated with it as it feeds through the system.
Thanks very much for being with us, Dr. Gokarn.